Morning, Steve Ray in Chicago with the morning grain comments. Well, it seems like a little bit of a turnaround market. Stocks are a little bit lower after an impressive rally. We've got crude oil lower, and again, there's talk about no OPEC meeting yesterday, and then a few of the countries actually increased their May oil production above the agreed on curbs. And so there's also some discussion between maybe Saudi Arabia and Russia about the future policy. We also know the dollar's a little bit higher. We've seen the recent weakness in the dollar cut into Brazilian farmers' profits and kind of slow the movement down there. As far as weather is concerned, mostly favorable worldwide. Looks like the new lands, spring wheat areas of Russia's drying out. Here in the United States, tropical storm will be moving into the Gulf and provide some heavy rains across the Delta and eastern Midwest. 3 to 4 days before that, we should see warmer and drier conditions over most of the U.S. The storm should break down the ridge and allow for zonal flow, which is normal conditions at least after the storm through June 19th. The one area that we're watching pretty closely is North Dakota. They're supposed to get some scattered showers over the weekend. If they miss that, it may be a while before their next rain, so we have to kind of watch that for the crops up there. As far as individual markets in corn, we're a little bit higher, although China sold 4 million tons of corn out of the reserve at an average price of $6.40 a bushel. That's kind of weakened some of the domestic corn prices in China and reduces maybe the chance of them importing some corn. In the bean complex, unchanged. We've seen a rally in beans due to China buying U.S. beans, but there was a report that their hog numbers actually aren't going up, which suggests that they may slow some of their import demand. We also have seen vegetable oil futures in China and around the globe lower. The palm oil market has been rallying, which has helped the soybean oil market turn over 28 cents a pound here in futures. But India announced that in maybe May and June, they will reduce their imports 50% due to reduced demand because of the virus. We also see in wheat that Russian FOB prices continue to move higher, higher domestic prices until their harvest has increased prices, which is supporting the wheat market. We also see that there's some dryness across the southern plains and some heat might cut into the U.S. hard red wheat crop, which is also expected to be down from last year. Soft red, though, expected to be higher than last year, so we continue to maybe look for the Kansas City futures to gain on Chicago, and we'll kind of watch the wheat-corn spread and see if how much wheat will gain on corn. But for the most part, the corn market is probably going to trend lower just because of too much supply. The only thing that would rally corn this year would be a weather problem. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.